Good morning. Let's get right into the stock market technical analysis. We've got some action going on this morning, so I want to point that out. I think there's opportunity to make some money here in this market. So, starting out with triple Qs, a couple things I noticed. All right, we have this key level of resistance. I've got it marked out. I know I got a lot going on here on the chart. Just follow along. All right, 484, basically 401. I've got that level marked out. You can see on the Qs, on this hourly chart, we were basically rejected there several times. Rejected here, rejected there, rejected there, rejected there. Each time we got up to that resistance level, we've been rejected. Now, last week, we popped there above it, and they just traded up there above it all last week. Again, that's your low volume holiday trading. There's often, there's very thin trading, low liquidity. It's just retail traders and 401k money flows. The pros are out on vacation, and so you don't want to take that price action as market consensus. You really need to wait till you get out of the holiday trading, you get back into regular trading, and the big players come back to the table. And that's what we're seeing today. We're seeing big heavy price action to the downside. So clearly we've broken back below that resistance level. That's been another false breakout bull trap, and we're back below there with pretty impulsive hourly selling candles so far today. So that tells me that we are likely heading down to the lower end of the range, which I see at about 381, right in here. Looking at the daily chart, I want to point out kind of the key level of support that I think we're heading down to. You can see here marked in blue. Look at all these areas that we've tagged this trend line, and it's held as support. We've got about 5 reactions there. And as I zoom in, I think we're heading right down to that area. So right in there, 383, 381, right in there, I think is where we're going. And then, we'll just take it day by day. We'll get down there, or if we're going to head down there, then we'll look for a breakdown. We've already tested this key level. Right here at 382.83, you can see we hit it once, kind of hit it a couple other times. And, if we get back down there, maybe we're going to break it. But until we see the breakdown, we don't know. But I am seeing, pretty good selling so far today. And then also if you look at the futures, NASDAQ futures, same kind of look as the triple Qs. You can see as I zoom out on this hourly chart, look at all the times we've got rejected right at that key level. This one is about 16,450. You can see I've got it all circled, rejected, rejected. And then here's your holiday trading. They pop above it. But today, as the market starts to get back to normal trading and everybody's in there, it's a new year and you've got, boom, big selling coming in. So we're back below that level. It's just another rejection that that's what I read into. This is a bull trap right here, kind of a breakout or false breakout. Looks like we're heading lower. And so I would say we're heading down to this trend line. If I go to the daily here, you can see it's marked in blue. Look at all the times we hit that as support. All right, 1, 2, 3, 4, 5, 6. So I think we're heading right down into that area right there. All right, looking at the SPY, it's going to look very similar, but the SPY, the SPY's been kind of grinding higher, but it's on thin, really weak breadth. You've got, just a handful of stocks kind of carrying the market higher, but we're at key resistance, and I've got that kind of circled. So if I look at the daily chart and I roll all the way back to 2010, 2009 timeframe, we've got this price channel. See this price channel? So the upper end of the channel, where we've basically held as resistance, is marked in blue, and you can see rejected, rejected. This is going back, about a decade, more than a decade. Rejected right here, and as I zoom in, you can see where we traded up to, right in this area. Okay, rejected, rejected, and we're right there. All right, so it's a key level of resistance, major resistance, and it's right there. And it's also a divergent high. So you'll see here we've got clear negative divergence right there on your daily chart. And yeah, so negative divergence at major resistance, pretty much a good area to short. Personally, that's what I'm looking to do. So I am short the triple Qs. Grabbed that this morning on this breakdown action, and sticking with it. I think this looks like we're heading at least down to that area, possibly a lot lower. Moving on. Just want to touch base real quickly from a higher level on these FANG stocks. This is Amazon, one of the major players, and one of the reasons, the Amazon's contributed to a lot of the gains in the S&P over the last decade. And Amazon, as you can see here, really since July or so 2020, has just really gone nowhere, kind of sideways with a slight drift higher, but basically sideways. There's been really no gains. It's just been this big choppy sideways market. So Amazon's not really showing leadership for the market. And then as I look at Google, this one looks like it's starting to break. Now Google was a strong player, back in 2021 and half of 2020, clear uptrend line right here. But look at the negative divergence that's been building on Google. Each new high has been a divergent high. You can see here, there's a high in price, lower high in momentum. All right, and the momentum's just been dropping lower and lower and lower while price has continued higher. That tells me that this bullish trend has been losing steam. Each new leg higher, it's been losing steam, and it's likely going to reverse. Now you can see in the price action on the support line here, you can look at this March 2020 lows, support, support, support. And then up here, we started to get pretty shaky and chop through it. We managed to kind of hold it, but boom, we're clearly not holding that anymore, and we're chopping sideways. To me, it looks like the bullish trend is over, and we're actually starting to put in what looks to be a bearish trend. We're making lower highs. So here's a high, lower high, lower high, and we got a low, a slightly lower low. All right, I think we're downtrending. And it starts pretty shallow. That's typically how downtrends and reversals start. They often start shallow, and then they increase in intensity, and the selling increases as more and more people start to notice that the uptrend is over. So Google, I think, is clearly showing signs of a return to reversal. Amazon looks like it's topped out, at least for the short term. There's still strength in Apple. Apple is, Apple has a bearish rising wedge, but we broke to the upside of that wedge. I don't see any real sell signals yet in Apple. Still some strength there. Facebook looks weak to me. So Facebook, big bearish rising wedge. I've got that kind of marked out here. We broke, so you had a big sell signal right back here, September 21. Broke, and we're just kind of consolidating. I think we're heading lower in Facebook. That one looks weak as well. And Microsoft looks relatively strong still as well. I don't see clear signs quite yet on Microsoft, although we do have a negative divergence up here at the high. So this recent high here, see that you had a lower high in price, a higher high in price, a higher high in momentum, a lower high in momentum. Momentum is moving downward on the RSI and the PPO, and yet price continued to make a higher high. So I think Microsoft could be showing signs of a reversal soon, but bigger picture still showing relative strength. So Microsoft and Apple have been strong. Amazon, Google, Facebook look weak. We're down to just two of those major FANG players. And then there's Tesla. I think Tesla does have an impact on these as well. And Tesla's, kind of the wild card. Tesla is right at resistance. I was thinking we might get a slightly new higher high than that previous high right in here, about 1240. I think we might get it. Maybe just a quick little pop above there, make a new high, and it will clearly be a divergent high. See the momentum, how it's just been heading straight down? So if we get a new higher high in price, that's going to be a divergent high, and I think that's likely going to be it for Tesla, at least before a major correction. So I'm watching for that. Now, I know a lot of people are just foaming at the mouth bullish because the market continues to kind of make new highs, but that's a very deceiving thing. You've got a lot of stocks that are actually in bear market territory. A lot of those momentum stocks have really got, murdered out, and you've got, you've just got these FANG stocks, a couple FANG stocks they're just so heavily weighted in the indices that they're able to kind of keep the market propped up a little bit. And then you also have like financials are doing okay, and there's a few sectors that are doing okay. Oil is doing well. But so what we'll do is start out with some long trade ideas. All right, KHC. I haven't talked about this one for a while. I'm long this thing again. It's been kind of a chop fest recently. The key level I've been really keying off of is right there at 35.60. Back in 2019, you had a big gap down. I think they had some accounting scandal or something. Big gap down, and that held as resistance. As I zoom in, you can see on this daily chart, that held as resistance pretty much ever since. As I zoom in, there it is, resistance, resistance. We finally broke back here in 21 after a kind of a multi-year bear market in this thing. Broke out. It rallied up, came back in, held support right at that key level, that 35.50 area. And then just recently broke down, and it's been back below it. So I was looking down here as a potential false breakdown or a bear trap. And the reason why I liked it down here as that is, and what I was looking for is, we had this bullish divergence starting to build. See this momentum moving higher right here while price was continuing to kind of drift lower. We had bullish divergence starting to build, and then we broke back above this right here. See that breakout? That looked good to me. That looked like, okay, we do have a bear trap, but then they chopped it back below and they stopped me out right here as we came back below. But you can see, boom, back above. Well, I've been a little skittish to get back into it just because it's been pretty choppy. But today you can see, boom, big impulsive buying, clearly putting this range in the dust. So I think we're probably good for a trending trade higher up to gap fill. Gap fill is this big gap back here in 2019, and I'm looking to fill that gap 47.87. Again, I'll probably sell it a little bit early. You don't want to wait to the very last penny, but I'm looking for a move up to that area to fill that gap. I like it. It's got all the technical indicators. We had the false breakdown. So right now, this was your bear trap, and we're moving higher. So all the people that were shorting are starting to cover. Longs are piling in. Looks like it's a bullish stock right now up to gap fill. We're probably going to find some resistance right here. We're almost there, but right there at 37.85. So a little bit higher, maybe we get there today, but likely going to find a little bit of resistance there. And what I would look to do is probably add on pullbacks on this as we continue to trend higher. So I like that one. Rio, I've been talking about this one. Still looks good. You can see up about 2%. Okay, Rio, again, the buy signal came back here on December 2nd. But again, we had a bullish falling wedge. We had bullish divergence. Again, this is the technical setup. So I start talking about trades when I see the technical setup. Okay, so this one, that was your setup. And then we look for the buy signal. And the buy signal came on the break of that bullish falling wedge. Ever since then, it's just been up, moving gradually higher, moving towards our first profit target now, 71.19. So all in all, this thing's, up 7-8%, depending on when you got in. Looking for first profit target. A little bit more to go, and I like it. Still moving higher. Commodities, soybeans, coming into what could be some near-term resistance, but I still think we're going higher, up 1.5%, 1.6%. So again, this one, you had a downtrend here. We had bullish divergence building. So again, this is just repeat, rinse and repeat. So see the divergent low in price. So there was your divergent low. See the bullish divergence, the momentum building higher, and we look for a buy signal. There it came on November 15th. We did a back test. They chopped it below. It was a whipsaw. And, actually another buying opportunity, but you still had that buy signal, and up, and away she goes. So that is, basically if you took the buy signal, if you took it midday or so, or even if you waited till the end of the day here, this thing's up 6-7%, and looks like it's going to continue moving higher. I'm seeing, and that's one thing I want to point out. Look at the commodities. Look at coffee, continuing to trend higher. Wheat's kind of pulling back. I'm looking for a buy down here at about $6.97, $7. I think wheat can pull back a little, but still uptrending. And all these commodities just continue to lift higher. Here's lumber continuing to trend higher. Lumber was spiking here on inflation, and then they pulled back, and the Fed came out and said, I think, everything's transitory. Look at lumber. Look how it's pulled back. Well, sure enough, that was just lumber pulled back to support back here. That was the former resistance, about 456, and pull back, held support. Since we've broken out, that's been support, held back, held support, moving higher. So I wouldn't be surprised to see lumber break higher. Although short term, we've got some negative divergence here, so we could pull back, near short term and have some sort of a pullback, maybe down to this level right here at about 820. But bigger picture, trending higher, and all the commodities are trending higher. And that's the thing. The Fed is really trapped. The Fed is talking about raising interest rates. They're hoping that they can maybe talk the market down and talk these commodities down and talk the inflation trade down without actually having to take much action. But I think it's going to be proven that the Fed is going to have to take action if they want to fight inflation. So that's the trade. We got to watch for that. Doesn't mean they're going to take action. They might not. But if they do, it's going to have to be decisive action to fight inflation. And the market's going to come down and sell off pretty drastically. We're going to have a big correction, maybe a bear market, if that happens. And if they don't choose to fight inflation, commodities and the inflation trade is going to continue to run. So kind of have to place your bets on which way you think that's going to go. I don't think the Fed's going to fight inflation because they can't, without collapsing everything. So I think it's easier for them to just talk to let inflation continue to run and kind of talk it down, try to spook the market here and there, where they can to keep the inflation trade contained, but they're not going to be able to actually stop the bigger picture trend. So that's my take on it. Moving on, another long trade setup, BABA. Now, again, it's just a setup. It's not actionable yet. We have a bullish falling wedge. We have bullish divergence building on BABA, but we still haven't broken the top of this wedge. Kind of popped it a little, but nothing decisive. No strong close. You don't want to see a breakout's not this, all right? It's not just a little tiny, inch higher than the trend line. Breakout is a nice solid green candle above with a close above, all right? That's your breakout. So we're looking for that, all right? That's your next buy signal. And if we get that, I think we trade up to 130.28, first level of some minor resistance. But I think the target is probably going to be up here at 160, 148. So we'll look to probably go long and then cover, close out the long trade as we enter the gap and get close to gap fill. I'm not going to hold out for the full gap fill on that one. But I like it as a setup, not as an actionable trade. Until I see that breakout, no dice. Okay, short trade ideas. Now this one's not in the best location. Yesterday was the actual sell signal. I didn't do a video yesterday. Again, that's why I have a stock market technical analysis course so that you can learn to find these trades and how to trigger the trades for yourself so you don't have to wait for me to point out everything. So take the course if you haven't done so. I think it's a benefit for most people that don't understand these concepts. You'll learn a lot, and I charged $99 for it. I didn't want to put it out there for free because it's a good value. There's a lot of good content there. It's well worth the money in my opinion. So check it out. Link in the description below. So this trade, Etsy, we had this clear trend line right here on the daily chart. You can see here support. We held support kind of right in here. There's another tag of it. Now, last week I was watching this one because I noticed during that Santa Claus rally when a lot of the tech stocks were kind of rallying and the market was just in general rallying, Etsy wasn't doing that. It was just treading water right through here. And so that looked weak to me. And so I was looking for a breakdown of that trend line. We got that break right there yesterday. So that's a sell signal. See how it breaks? It closed at the lows. Just all in all, that's a sell signal. And the one thing, so, what I did is I took a short trade on this about halfway through the day when I pretty much figured we'd gone through the morning session and this didn't have much of an opportunity to really recover that. It looked like a breakdown and was going to be a sell signal. I took the short, and today this thing was down about 6.5%. Now, it did get a little bounce here at this support zone, 194.57. That's kind of your recent low right here. It's not a major, I don't see it really as a major zone of support. I mean, we could maybe extend it out like that. But again, this is the area, of support right now. So the next sell signal, what I would do is if you're going to break, if you get another break below this and you start to close below this, then we should trade down to, 181.77. But maybe we bounce here up to this area of 210.19. That's your next objective area to short at. So as far as I can tell, this is a sell the rip stock. If you're going to bounce up, you short it up there, in my opinion, and we'll start to trend lower. It's going to look like this. We're going to kind of do this thing. All right, but trending lower over time. So what I'm looking to do is, I covered some of the short trade this morning as we fell down to that near-term support, and I'm looking to add that back. I have about a half a position right now, looking to add that back up there around that 209.85 area for continued downward price action. Qualcomm, I still like this as a short setup. What I like about it, look at the negative divergence. See how that's just been building clean and clear negative divergence on both momentum indicators. So I like that. We have an uptrend line right here on the price action, and we broke trend. So you can see broke trend, came in for a back test, and we've just been drifting lower. Nothing impulsive yet, and that's expected. As more and more sellers become, or people realize that this is no longer uptrending, the selling will increase. You don't want to be shorting as the selling's increasing. You want to short before the selling shows up. That's how you make money, is you got to be first, basically. And so basically, I'm looking for more downside action on this stock. We've got some support here about 170, 150. We break below that. We've got a big gap right down here, and traders love gaps. So I would look for gap entry about 153.85. We probably get a reaction on that gap. And then if we enter the gap, we're likely going to fill the gap. So final profit target would be gap fill about 138.90. I don't know if I'd hold out for that final gap fill. It's a pretty obvious gap. So we probably, what we'll do is headway, but maybe down into the gap, get about halfway or close. And then that would probably be the bottom. So that's what I'm looking for on that trade. But still, from where we're at now, that even down to about halfway through that gap, we're looking at about a 20% drop. And I like that for Qualcomm. To me, that looks good. Moving on, AVGO is a very similar setup, and these are both semiconductors. So again, AVGO, you got a gap down here. You have negative divergence on the RSI, and on the daily, it shows up on the hourly really for the for the PPO. See that negative divergence right there? So we continue to drift higher. Each new high on this hourly chart was a divergent high. See the momentum dropping off, and yet price was moving higher. We also moved into major resistance. This red line here is major resistance. As I roll out, you can see that is going back to 2020. This was support, 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 and then we broke resistance, and then this parabolic move right up to major resistance with the negative divergence. I like this one, and I like this one for, at a minimum, gap fill, 594.20. And that is going to be a move of about 10%, 10-11%, at least for this first move lower. I like that. Okay, gold still hanging in there, still looking good. So again, each day we're getting, each day is a data point, and we just continue to see gold hold its bullish trend, moving out on gold. I've got this bullish trend on the daily chart going back to 2018. You can see support all through here, and as I zoom in, we've held support, and held support, and we're still above that bullish trend. So nothing is changing on gold. Still looks bullish to me. Now we've got short-term resistance right there, 1833. You can see resistance, 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 and we got another tag of it yesterday over the last couple days. So 4 reactions. We got to break that to the upside. We get a break of that, and I've got this trend line here, but it's not a clean trend line because we only have 2 reactions. We got kind of this group and this group, and 2 is not enough. So I have it marked out in case this wants to, act funny. But what I think is going to happen is if we break this 1833, it's off to the races on the next bull leg higher. And I believe we'll make it above the all-time highs in gold and probably head up to about 2,600 on gold. That's kind of my 2,700 is my price target. Maybe up to 3,000 on an overshoot. As we start to reach, approach that 2,600, gold will get extremely bullish. You'll see all the news media talking about it. You'll see all the traders. It'll probably be a Robinhood top trade. all the people will be piling into gold, and that's how it works. It's the same kind of price action that you see back here in August of 2020 when everybody's talking about gold and everybody's piling into it. That's the momentum trade, but usually that's the end of the move. So if we start to see that, we'll start to look for signs of an exit. But as of right now, looks like this is, kind of early on this bullish trend, and I still like it. Newmont, just a trade idea here. So Newmont has, bigger picture, Newmont looks bullish because gold looks bullish. Newmont had this resistance right here about 59.53. You can see we held the resistance, resistance, resistance. Now we broke out of that, but again, that breakout occurred during that thin holiday trading. So I'd look for a pullback to that level. Could be a false breakout, but for now, because we broke out, I would look for a move down to that area as support, and that's your next buy zone, your next objective area to buy. All right, so that's what I'm doing. I pulled my Newmont mining, and I'm looking for a pullback down to there, and I'll probably add it back right there, looking for continuation to the upside. And again, I base this off of the bigger picture of the gold trade and how gold continues to look bullish as well. And AMC. So this thing's pretty much done as far as I can tell, it's just going down. So AMC was a meme stock that, basically just rallied on a short squeeze that took place back here. You can see just straight up, but, ever since then, it's just been heading lower. Now we've got key support / resistance, 30, it's about $30. So you can see we held that for quite a while. It held support. Finally broke though. Started to break right in this area and a clear breakdown right there. Just big impulsive selling. Ran down to the next level of support, which was your former high, 2025. See that right there? And we ran down, hit that. I figured we'd bounce back up to that previous area, and we did right there. That was then resistance. I added to my short position right there, and down we go. So as far as I can tell, we're likely going to break this next level the next time we get down here at 2049 and head down to the next level of support, which is about 1460. This thing has a potential long ways to fall. I think it's very possible that we get down to this area right in here, which would be about 766 as and that'd probably be a final target. But just as this thing shot up, this is a thin zone right here. So you have just massive people all piling in. Well, all these people become sellers as this thing just starts to collapse. And again, this also, all the trading took place right up in here. And I know I've got a lot of lines going on, but look at all this trading. All kinds of people were piling in this thing long, thinking it's going to the moon right in here. And all those people are going to become sellers now that they're starting to get underwater. And I know they talk about diamond hands, but the technicals don't support it. And basically, as far as I can tell, these are all going to become sellers. They're going to become panic sellers, just like they became panic buyers through here. They're going to become panic sellers. So this is a thin zone, which to me tells me we're heading straight down to the bottom of the thin zone. 1450 is the next target in my book, 1450. We'll probably get a reaction there. And then final target could be about that 766 area. But this is a big mover, and if we move down to 1450, we're talking about a 40% drop. Right? I like that one. Okay, long video. I'm going to get this one out there, guys. Leave me a thumbs up if you find value in the content. I throw out several trade ideas. Hopefully they work out. No guarantees, of course. Everything's just my opinion on this channel. And I will catch you guys on the next one.